Now let me open up the link to the live stream. Now let me open up the link. All right. Okay, I'm gonna paste the link for the YouTube live stream in the Discord chat right now. So the link's here. And now I just have to open up the YouTube chat. So we are all ready to go. Perfect. Let me close this. All right. So I'd say let's get started. Our DR IDR range for the New York kill zone has officially formed. Let me mute myself here. All right, so we will have to wait for confirmation, but first of all, we start our analysis on a higher time frame. Let me actually quickly duplicate this tab. So numbers are working again. I'm not sure what's up with this little bug, but if I have the chart going on for the whole day, those numbers disappear, and I don't seem to. Nope, this does not work. All right, let's quickly go up to a daily chart and see what we're looking at. Let's just hide them, I'd say. Now we duplicate again, and we are going to do our higher time frame analysis on ESH 2023. The futures contract. All right, let it load. Now we go up to a daily chart. Super bullish movement so far for the whole day, and very easy entries as well. All right, as of right now, we're still within our previous weeks. Let's start from the weekly quickly. Our previous week, the week prior to Christmas, our high, our low. We are going to color those two lines with a straight line first of all, and then we're going to give it a orange color. This one as well. All right, for a higher time frame, now we drop it down to a daily time frame very quickly, and we see that we are still ranging within our previous week's high and low that has been created on Thursday, December 22nd. So as of right now, we're still inside. On a daily time frame, we still have a fair value gap from here to here. So we can draw this also onto our chart until it's filled. And below, we don't have any fair value gaps or volume imbalances that we would like to see filled. I'd say the next area of major liquidity would be below this low, which is basically lining up with this low. So we are going to pick this low right here. For sell side liquidity, let's make it a dotted line, and we are coloring it in red. Next target would be this low, just based on our daily time frame, and afterwards we would be looking forward to target this low. All right, let's drop it down to a hourly time frame and check for hourly fair value gaps. Quickly refine our previous week's high and low. All right, so you see we're still inside. We can also look at our current week's high and low. So for our current week, our high would be sitting right here. We make this a orange dash line because the week has not closed as of right now, and our current week's low is sitting right here. That's also interesting to keep track of. Now we look for fair value gaps. Let's quickly turn the DR IDR off. We have a fair value gap right up here at 3893. It's relatively up high. And we have a fair value gap from here to here that has not been filled yet, here based on a hourly time frame. We can also quickly check the 4 hour to see what it's looking like. Yep, both of them are matching up. We have a higher time frame fair value gap on the 4 hour chart right here. And nothing much more. Okay, let's go back to the 1 hour. I think we closed above the DR range already. Did we get a close above? Not really. So we basically closed on it, but we're now on our move to close above the DR range. But I would not look forward to take any entries long into this market right now, because we are heavily I'd say in my opinion, overbought. I think we're due for a retracement. This is pretty much parabolic movement right here, a typical expansion day. So what we're going to do now, so we have our hourly fair value gaps drawn up. We can actually label them with a 1 hour FVG quickly. Quick top-down analysis. 1 hour fair value gaps. So those are on the chart. They haven't been filled yet. All right, and then we are also going to color them in a bearish color because those are bearish fair value gaps. All right, that's done. And this one right here would also be, let's make this one in gray because that's out of reach. Maybe we will see. So this is our current week's high, CWH, and this is our current week's low. This thick orange line is our previous week's high and previous week's low. So as of right now, on a weekly basis, we haven't extended our weekly range. So now we are going to go down to a 15-minute time frame. We are using an indicator called high low by unknown unicorn, I think. That's one I always use to check for our previous day high low without any troubles. So right here above this 1 hour fair value gap that we just drew up, which is also lining up with a 15-minute fair value gap, we would have our previous day's high. And right here we have our previous day's low, which also hasn't been taken out. Okay, hang on, it was a mistake. And again, of course, if you have any questions about what I'm doing on the chart, feel free to ask it in the chat on Discord or on the YouTube live stream. All right, so let's turn this one off. So we have our previous day high, previous day low marked up. Our previous day low is actually lining up with our current week's low. So current week's low, we are going to add to this previous day low, PDL. And we are going to color it differently now. Let's make it a white line. And we have our previous day's high right here. Let's also color this in a white line. Make it actually a thick line. Same for this one. Perfect. Previous day high, we extended out until midnight New York local time. Same for the 1 hour fair value gap. We could now actually be looking forward to current week's high. So we have all this in our view. We can now refine the 1 hour fair value gaps basically. Right here. That's lining up perfectly. Now we could actually consider this we still leave it on there because it's perfectly lining up with the lower time frame here on the 15-minute time frame. So this fair value gap is very likely the next buy side liquidity target. So what we can write in here, buy side liquidity target. Next area to be targeted, we can now also use a price node, a price label. Right here, we would be looking at a value of, nope, not like this. We're gonna plot it right here. 3875 and a quarter. Our current week's high is sitting at 3,903 quarters. Our previous day's low is sitting right here at 3805. And our previous week's low is sitting a few points below that. All right, so now we have all the numbers on our chart. And now we can get ready to work. So let's go to a 5-minute time frame. See this parabolic movement? Let's say rather unlikely, but we will see if we are actually able to take out buy side liquidity today, fill in our hourly fair value gaps that we quickly captured from the hourly time frame right here and right here. So I'd say those would be the next areas or draws on liquidity to be targeted before we might continue taking out our current week's low and our previous day's low basically. But overall, we're still inside our previous week's high, represented by this thick orange line, and our previous week's low, represented by this lower thick orange line. Alright, so on a weekly basis we are trading inside. We can turn on the DR IDR. Let's use a vertical line for New York midnight. New York midnight happened right around here. This is New York midnight. So this is Thursday now. This is the price action of Wednesday. And here we have the price action of Tuesday, Wednesday, Thursday. That's all we should be really concerned about right now, the past 3 days. Let everything load onto this chart and quickly have a sip of water. And now we can see how this major fair value gap above our previous day's high right here is lining up with 15-minute and 5-minute fair value gaps. We could actually extend it up even higher for our lower time frame. You could also draw those 5-minute fair value gaps in here now, but we're gonna leave it like it is. And if we reach this target, we can refine our fair value gaps to be a little bit more accurate. But I'd just like to have my higher time frame fair value gap on the chart. Alright, so we have our previous day high, previous day low. We have our current week's high, which is right here at 3,903 and our current week's low, which is lining up with yesterday's low. Alright, so now if we have a look at what the current RDR range is presenting us, we can continue to draw a few fair value gaps. This time we are looking for bullish fair value gaps right here, which would be a M5 FBG. We are going to color this in a green color for a bullish fair value gap. That's what we're looking at right here. We already had a small fair value gap fill right here. Any other major significant fair value gaps or volume imbalances? If I'm missing anything, feel free to write it into the chat. All right. Fair value gap here, fair value gap there. It has already been filled. Those fair value gaps prior to our 9:30 opening also have been filled beautifully. I actually took a quick scalp of this bigger fair value gap right here and also on gold USD. Right here, those two fair value gaps. And earlier this morning, based on buy side liquidity taken out, change of character, 5-minute fair value gap fill, target was the sell side liquidity right here. Unfortunately, those two trades, I didn't hold them long enough because I was worried about the news release at 8:30, right around this time right here. We had a move to the upside. I closed my position right here. Then I saw the pullback into this fair value gap, and I actually entered a new buy position when I took profit again above buy side liquidity, above our 405 high. But this is not the topic for today. We are only going to be focusing on the SP 500. Another fair value gap right here that has been filled beautifully. And this is the price action so far for today. So we see that during Asia, we had a consolidation below our previous day's low right here from 4 p.m. New York local time. So this is our previous day low. So during Asia, during our post-session range, we did not get any bullish or bearish confirmation. We got a few hints. For example, this close above the IDR of our Asian range, but there is no confirmation. There hasn't been a confirmation during the Asian range. No. No confirmed bias for the Asian range. Right here around midnight, we continued inside our Asian range. Let me actually zoom in here. And then we finally broke above our Asian range at the beginning of our, basically right here after 2 a.m. New York local time. We started to move our way further to the upside. We could start to draw fair value gaps even from the Asian range down here. For example, this one, it has been filled beautifully, from which we actually started to move further to the upside. Left behind a few more fair value gaps in here somewhere and down here that haven't been filled. But for our overnight range, right here, I'm just going to call it the London range because it makes it lots more simpler. London range, bullish bias, right here. So for our London range, we had a confirmed bullish bias with our close right here above our DR high. So we are going to use this little triangle that the master is always using. That's a little bit too big, a little bit too small. No, okay. Right here, bullish bias confirmed, and we got a beautiful pullback into our DR high, basically right here. On a lower time frame, we actually had a small fair value gap right around this area as well. But this would be our type A entry opportunity. So we closed above, we retested our DR high, or for a bearish bias, our DR low or IDR low, reacted bullish off it for a continuation move to the upside, leaving behind a few fair value gaps on its way towards the end of the move. So basically where the exhaustion part of this move is happening, fair value gap right here, and fair value gap of that we actually used to bounce from right here. So I'm just going to keep this one like this, and I'm not going to drag it out. We filled in this fair value gap quite oftenly. We wicked right inside of it. We closed and opened up back inside of it as well. So this would have also been a nice entry opportunity for a continuation move. For all the trendline traders, I'm going to include this beautiful trend line, of which we broke out of, retested, and continued further up higher right here at 830. Of course, it's just a random trend line if you don't like to use trend lines, but sometimes they can actually be very helpful. We could start to draw this little pennant right here, of which we broke out, but I'm going to leave this away. So after this, after our 825 fake out, basically filling in more fair value gaps right here, and another smaller fair value gap. Let me actually zoom in here so everyone's able to see it. Small fair value gap right here, perfectly filled for a beautiful entry opportunity. Let's actually make this little arrow here so we can relate to all those awesome fair value gap entries that we could have used for today's trading, for today's price action, basically, such as this opportunity right here. The next one would have been right here. The first few ones could have been here. We did not wick into this fair value gap right here, but we could have also used our DR high basically right here for a move further to the upside after our close above the DR high was confirmed for the London range basically. So let me zoom out again. Okay, that's a little bit too big. Let's make those errors a little bit smaller. Come on. And one smaller, perfect. All right, after which we filled in this fair value gap, which basically has been filled in right here, right at our 9:30 a.m. opening. Let me actually use a little call out right here. This is our 09:30 open, just for a little reference point, which is also our DR low as of right now. 9:30 open. Right here we had our 8:30 news candle, so I'm going to use a label right here. 08:30 news. Retest of this beautiful trend line and fair value gap, whatever you're using, and a continuation move further to the upside. So right now we have a confirmed close. Okay, let me actually use one more little arrow here for potential entry opportunity right here at 9:30 with a buy limit, for example. All right. So what we are going to do now is we are going to use this little triangle to also confirm our bullish bias with a close above the DR, same as we had during the London or the overnight range. The question now really is, okay, we have a small fair value gap that we left behind before closing above our DR's high right here with this little candle. It's not a significant close above, but we will see what we get. We can actually break it down to a 1 minute time frame now after we finished all our analysis. All right. And do we have any more fair value gaps or volume imbalances that we could be looking forward to target? I don't see any, to be really honest. Not important ones, I'd say. So we go back to our 5 minute time frame where we closed above. So our draw on liquidity would be right here, which is our previous day's high right here, and a fair value gap that we took from the 1 hour time frame and we refined it down to a 15 and 5 minute time frame. So this would be our buy side liquidity target. Now the question is just that we're looking for a nice entry, because there is, hang on, let me actually turn on the DR IDR. Okay, let it load. Okay, here we go. So for an expansion model, we could actually be looking to take an entry up high for this quick scalp into our buy side liquidity. Basically, we can do this, especially because, yeah, let's actually connect our paper trading account. We click on connect. We can actually just close this position. No, close this whole position. That's a very old position, not too old, but still from December. All right, so here we go, 9:30 open, 8:30 news, retest of the trend line, consolidation prior to our 9:30 opening with a quick stop hunt for all the traders that got into this market and continued trading their stop loss up high. So now we're connected with our paper trading account, and we can simply shut this down. We can also turn on the tick grid to check for divergences, and we already see the divergence that's forming ever since we started. Basically, we had a up high opening. Let me just, no, we are not inverted. So what we can see now with using the tick grid is that actually we are forming lower highs, while at the same time on our price chart we are forming higher highs. It's hard to draw because it's a very steep increase of price basically, but I'm going to keep this on here and I'm going to write a little text note to here. Bearish tick grid divergence. Perfect. That's currently what we're looking at. So let me make this a little bit smaller so it's not too much in our way. All right, beautiful. So we could, even though we have this massive bearish tick grid divergence, we could still see our buy side liquidity target to be hit. So if you're already in a position, maybe from our 9:30 open or this fair value gap, or maybe even this very small fair value gap, I'd say I would use this area, 3875 and a quarter, as my overall profit target for the SP 500. Or maybe you can still leave a runner, but I'd say this would be a good enough move if you, for example, entered on a buy limit down here. This would be a 182 ticks move. Depending where you place your stop loss, you will see your risk-free reward. Is there background noise? Oh yeah, okay. So if you are watching the stream, please mute yourself. I'm not sure if I can mute them. If I can, I would be super awesome, but how would I do that? Mute channel markers red. I don't have rights to. Yeah, so but if I'm clicking on those, I'm reading it, Jacob, I can't mute them for everyone. So you would have to mute them either for yourself, or you simply click on the link that I'm sending into the Discord chat right now, And this is a link to our you should be able to because you're the presenter. I know I should be able to. I'm clicking on options, report problem, mute. No, I don't see it. There should be an option that I'm able, right click a user. Yeah, of course I can right click on a user, but this doesn't help. Anyway, if you don't want to be interrupted by people talking and not being able to mute their mic, the link for the YouTube live stream without any disturbances is in the Discord chat. All right, so where do we stop here? So we still have the sparse divergence. We're closing higher and higher. Very likely to take out our buy side liquidity target. And today was a very beautiful day for the end of this year, basically, with a beautiful overnight range, bullish bias, after which you could have entered over here, for example, this here, here, here. So there would have been 1, 2, 3, 4, 5, 6, 7 different entry opportunities on its way up to our previous day high. We will see how the market is closing today and if we're actually closing bullish on the daily chart, or if this might be a pump and dump scheme as soon as we took out buy side liquidity. But as of right now, a very easy day to trade. Of course, this is with hindsight now, but actually during the day, I did not trade the SP 500 during the day. I focused a little bit more on gold and the GBP USD because I've got my own strategy to trade with GBP USD and gold. And for the live stream, I'm always saving the DR IDR, even though after live streaming or using this strategy, the master strategy, for quite some time now, I can admit that I'm missing lots of good price action actually during the overnight range. So I might actually have to start looking at it as well. All right, so we see that we're reaching for our target. We still have our tick red divergence. So let's wait and see. We still have the fair value gaps that's left behind. We can also turn on our standard deviations. Oh, should we draw them ourselves? No, come. Let's turn them on. Show standard deviation. So our 0.5 standard deviation right here, this gray line is our target. I am going to mark up this line so we have it for the record right here at this level. Now we can turn it off again. I don't like too many lines on my chart. All right, this is our 0.5 standard deviation, 0.5 STDV, standard deviation. This could be another target after we rated our buy side liquidity from our previous day's high, right here at 3875 and a quarter. An entry opportunity, therefore we could look now on a 1 minute time frame, now that we have our targets and everything prepared. Let it load. Patience. All right, so now on a 1 minute time frame, what do we see? Beautiful fair value gap right here on a 1 minute 1 minute time frame. It has been filled, bullish engulfing candle, engulfing basically the last 1, 2, 3 bearish candles right here. So this could have been a very nice entry, or maybe also this 1 minute fair value gap. Let me actually color those smaller 1 minute fair value gaps now in a different color. Let's use yellow here. This could have been a potential entry, so you don't have to enter right here on the close of this candle. You can actually enter somewhere inside this fair value gap where you also received another opportunity to enter right here if you joined late to the party, basically. Hang on, let me redraw this. Perfect. A small volume inefficiency followed by a few more smaller volume inefficiencies that have not yet been filled. but I'm not going to draw them up here because that's going to be too much boxes and stuff like that, and I don't like having them on my chart, but I'm still aware of them. So those two entries could have been a nice opportunity to take it long. We got our close on the 5-minute time frame above our DR high right here on this candle. So we could have used a entry, for example, inside this fair value gap right here. So let's say we would have entered right here, which would have also been our IDR high with our stop loss down here and our overall take profit target at our first take profit target, buy side liquidity, our previous day's high, would have already been a 2.29 risk to reward ratio, after which I would have moved my stop loss to break even, targeting our 0.5 standard deviation for a 4.64 risk to reward ratio. Because it's a paper trading account, I'd say I might actually risk some money on this, because I want to see this buy side liquidity taken out. So we are just going to buy 1 unit for the market price. That's not an optimal entry, but I still just want to be in a trade while showing it. So let's go for our stop loss right here at this low, and our take profit target would be all the way up here. And we're going to re-enter with more contracts if we see a opportunity for it. Let me quickly also open up a new tab where we can compare all three indices with each other. Now I'm actually going to do it right here. All right, let's split our chart 3 ways. Here we are going to use NQ1 quickly, and we are going to use YM1 right here. We see the divergence on all 3 tick grids basically, but for the comparison we don't have to have it on our chart, to be really honest. All right, let's get rid of our Fibonacci extension and all those drawings here. They're not really significant for the analysis we're doing now. Also get rid of this little fair value gap. All right, we see that we have a actual SMT divergence happening. We had very similar setups on all 3 charts. I'm going to hide them here. So we had those 2 fair value gaps here from 8:30, from our 8:30 news candle up here, after which we consolidated sideways, forming some sort of a bull flag. But before actually breaking out of this bull flag, we pulled back inside of this lower fair value gap right here and here for a continuation move to the upside during the first hour of the New York stock market exchange basically. We also saw the same thing happening here on NASDAQ, and we saw the same thing happening here on the E-mini Dow Jones, but we did not get a full retracement into this lower fair value gap. But as you can clearly spot, at least you should be able to spot it, would be that we are forming higher highs on the S&P and the NASDAQ, but we are forming lower highs on the Dow Jones. So now we actually see a divergence playing out. So we will wait and see how we're going to react with this SMT divergence, because we have a bullish bias confirmed on both the SP500 with this candle right here, and okay, I can't copy it like this unfortunately, with this candle right here on NASDAQ right here. Also make this the same size. Now, come on. Yeah, fuck it. And we don't have a bullish bias confirmation right here on US 30 or the E-mini Dow Jones. So we're going to wait for that. We also don't have a fair value gap left behind. Like for example, that we have here on NASDAQ and the SP 500. Orders have been already closed in on a 5-minute time frame. So now that we are aware that there's a SMT divergence going on, I, for example, am not as confident anymore with this trade entry, but we will see what we get. I mean, we just retested this fair value gap, so we're just going to put one more contract on this trade, even though we have this SMT divergence and also our tick grid divergence. You see it even more right here on a 1 minute time frame. We keep forming higher highs, but at the same time, from here, this is our most recent high on the tick grid, we see that we are forming lower highs. So SMT divergence to US30 and a SMT divergence with the tick grid. So we will see if this trade is playing out based on this 1 minute fair value gap. We will see. If you guys have any questions, thank you for your, I was here yesterday also. Yeah, awesome. I enjoy it. And again, if you guys have any questions, feel free to ask them either on the YouTube live stream chat or on our Discord server right here in Live Trading 4. We will see if we get a bullish continuation reaction of this fair value gap to maybe take out the buy side liquidity. But most of the time what you'd see is a consolidation just below our buy side liquidity right here and our target to accumulate some more long positions, for example, to reaccumulate a reaccumulation zone, to maybe trap traders short that are already looking for a short position. But as of right now, we are still in bullish market structure unless we are going to break this low. So this would be our market structure shift, change of character, whatever you're going to name it. Let's color this in baby blue. So just that we have it on our chart, because as of right now, we're in bullish market structure, forming higher highs and higher lows. This being our most recent high, this being our most recent low. So if we're breaking this, we actually could be looking at a market structure shift, change of character for a potential short opportunity. But as of right now, we are looking forward to this high right here at 3871.5 to be taken out. This is our, let's write it here, short-term high. This is our short-term low, basically. All right, let's wait and see. We wicked inside this bullish fair value gap already once, twice. Let's see if we actually close in it now. The candle is closing in 35 seconds. We also have a bearish fair value gap basically happening right here. We will see. Let's check for our SMT divergence. S&P is back inside our DR range. Nasdaq is still above our DR high, and US30 did not even close or cross the DR high as of right now. So we actually could be looking at a retracement for a continuation move up higher. All right, this is very likely not going to play out, unfortunately. So here we have our confirmation for our bullish bias. And if we break this low, we could be looking at a market structure shift. All right. Bullish fair value gap. This is a 5-minute bullish fair value gap. Oh, let me actually go back to the 5-minute quickly to see what we're looking at on a higher time frame. Could also just check this chart. Upwards channel forming. Okay. Yeah, this is an old bullish fair value gap. 5-minute time frame. All right, looks like we're getting our market structure shift. We're about to. Let me use those yellow circles to mark up our most recent swing high and low. Move our stop loss 1, 2 ticks below our market structure shift, just in case those last 2 ticks are not going to matter anyway. All right, let's wait and see. Now it's time for patience. Let me check the live stream chat. Is this the same process you follow every day? Will this be recorded and posted to YouTube? Yeah, the YouTube live stream is automatically being recorded and posted after the whole live stream basically. Yesterday I think we streamed for a total of 3.5 hours. So yeah, this is also on YouTube, on a YouTube channel, ready for you to watch if you're interested. If not, I think you just use the replay tool and replay the price action. I think you should be able to do the analysis yourself, because you're actually going to learn a little bit more from it if you're doing it yourself and then double checking with, for example, someone else's analysis. All right, looks like we're getting our market structure shift. All right. I think I won't be switching from chart to chart today. I'm only going to be comparing the three indices with each other. Okay, we could also look at NASDAQ here for a second. We have this 5-minute fair value gap waiting here for us. Come on, yep, this one right here. Just drawing in fair value gaps right here, and one more fair value gap right here. This fair value gap has already been filled in on a 5-minute time frame. Next fair value gap we would be looking at would be down here. And parts of this fair value gap have already been filled in or wicked in, but we're gonna keep it open. We can use our ICT fib retracement tool to look for our optimum trade entry, our 50% level. This blue line represents our 50% of this whole move to the upside. We can do this on all three charts actually. But just make sure that we keep track of those fair value gaps. So now we actually have a market structure shift, change of character, to look for a entry opportunity short into this potential pullback. We can also draw in our volume imbalances that are still left here on a 1-minute time frame. I think we don't have any on a 5-minute time frame. Yes, this is futures account. Scope. Because otherwise we wouldn't have the, how would you say that, the opportunity to use a centralized chart from Chicago Mercantile Exchange, CME. So there are actually plenty of volume imbalances on the way down here for a potential pullback. Unfortunately, we don't see a fair value gap right up here, up high. So I'm actually going to break it down to a 15-second time frame to have a look if we can spot some fair value gaps. So this would be our expansion move to the downside. So what we could do for a potential short opportunity, I know we have a bullish bias. So I'm drawing the ICT fib retracement. Let me actually get rid of this long entry right here. And this fair value gap, that's all going to be in our way for our analysis. All right, we would now be searching for 15-second fair value gaps that have been left behind. We could be retesting our market structure shift. Our 50% level is right here. Our optimum trade entry would be very likely where most of the volume has been put in place. Right here, yep, exactly. So right up here we have a small volume inefficiency, and pretty much all the way through here the volume has been spread out very evenly, up, down. So, unless there's small volume inefficiency, parts of this fair value gap have already been filled in. So for a potential short opportunity to fill in those volume imbalances or inefficiencies on a 1 minute time frame, we could be looking forward to short it somewhere from a fair value gap region here based on a 15-second time frame. We also just formed bullish divergence on a 15-second time frame, but I think that's going to confuse us more than it's actually helping us. So let's just draw our Fibonacci retracement tool from our swing high to our swing low and wait maybe for a potential entry opportunity short to fill in some of those volume inefficiencies down here, and a smaller fair value gap and this bigger fair value gap based on a 5-minute time frame. You can just enter the YouTube live stream if you want and watch it there. Finn, VK, could you talk about the fair value gap between 930 to 940 candle on 500? Yes, shot. I was looking to enter, but it never mitigated. 930 candle, I'm pretty sure it mitigated. We can check it here on our comparison chart. 930. Let me get rid of this small order block. On the SP500, so the ES1 future contract, I think, yeah, we wicked inside of it. Let me zoom in to confirm it. We got a wick inside of it right here at 3829, 3829. So if you would have placed a buy limit right here at the beginning of this fair value gap, not sure if you would have been triggered, but very likely would have played out. So your stop loss would have been, for example, this one right here. That's our 830 low for your take profit target. I don't know if you trade your trade, so if you just keep holding until we reach buy side liquidity, which would be a bold move, to be honest. But did this answer your question? I think, yeah, we mitigated here on ES1 and we also mitigated it here on the ESH March futures contract for 2023. At least we wicked inside of it. All right, we had our shift in market structure. If we compare all three charts, we can now see that while the E-mini Dow Jones continued formed lower lows, we formed only higher lows on the S&P. Same for NASDAQ. I'm going to delete those lines so we're not getting confused. We also had a nice reaction of this 5-minute fair value gap right here on NASDAQ. So let's wait and see. I think the SMT divergence should be obvious for everybody who's watching the stream. All right. We also have a small fair value gap that we could draw in on US 30 right here. Boom. And an old fair value gap, very small one, here on the SP 500. Fish, you don't need permission to watch the stream, and I think are people already restreaming the stream here on Discord? Now I think no one's actually restreaming the stream here, so simply just hop onto the YouTube live stream. I'm going to copy and paste the link again. Agent Smith, I just saw you in the Discord. What's going on, man? Good to see you. All right, so let's head over to our March contract. We're now above our 50% move. Let's hop in a quick short right here with our stop loss above our swing high here and our take profit at our most recent swing low that we're going to trail down further. This Fibonacci retracement tool is basically just based on ICT's methods. I'm using a 0.5 retracement, a 0.618, the optimum trade entry level at 0.705 and 0.786. Those lines right here. And I'm entering short by basically here because we are in a in a premium array to basically take a short further to the downside after we had a confirmed market structure shift, change of character on a 1 minute time frame with our short-term high. But of course, we still have our buy side liquidity target right up here and our 0.5 standard deviation up here. Let me actually grab a little price note at 3883.25, which could be taken out first, making this just a fake out for all the smart money concept traders or to a quick stop hunt. We will see, but the opportunity is there. All right. As of right now, our charts look very similar to each other. Let's finish drawing all the fair value gaps that we could be looking at. Boom, boom, boom. All right. This should be all. Yes. Unless we're going to use the fair value gaps down here as well. Below our DR low. And this fair value gap has been filled in as well. Pretty big one here on US 30. Let's go back to our chart. We are holding some resistance at our IDR high, so we will see. Yeah, I think it's gonna be fish. It's gonna be hard to get into the stream when it's already 4. Someone would have to leave the stream and watch it on YouTube for you to be able to restream it. All right, 1 minute time frames lining up. We have a bullish bias confirmed, but it would be fair enough to say that we see a slight retracement into one of our fair value gaps or our 50% level for a bounce or those very low hanging fair value gaps inside our discount PD array regarding our opening range here from 9:30 until 10:30. All right, let's see how this trade after our market structure shift is actually going to play out. We also had another divergence. Did we? Not really. We formed a higher low now, right? A higher high basically here on the tick grid. So we could be looking at, is it divergence? So we had this major tick grid divergence right here, which could have given you the indication that this might reverse, but trading divergences is pretty hard. We have our SMT divergence between the indices with higher highs, lower highs. And then after a successfully completed market structure shift or change of character, you could be looking for an entry above the 50% level for a premium entry to take this trade short into profit area. So I think our first target will be drawn to our first volume imbalance right here. So we will see. That fair value gap you just drew there, I was talking about that 940 candle. Yes, you showed the wick on 832. No, I'm pretty sure I didn't. So this is the 9:30 a.m. New York local time stock market opening candle. And right here we have the 8:30 candle. We can also zoom out on our 5-minute time frame bigger chart right here. We had our overnight range, right? Okay, let it load first before I start talking and talking. But I can show you even without the DR, we had our Asian range basically forming right here with no bias being confirmed. We had this fair value gap from which we basically started this whole parabolic move to the upside. And then we had our London range where we have our bullish bias confirmed. We pulled back inside of a, I think 1 minute fair value gap or something right here. Now our DR high and IDR high range in between. So we had our pullback type 1A entry and continued up higher, filled in more fair value gaps, and then we had this little trend line that formed right before 8 a.m. New York local time. So here's 8 a.m. New hour is opening up, new momentum hopping into the market or jumping into the market. We had our break of the trend line, our pullback right before 5 minutes before our news release basically here at 8:30. So we pulled back, retested the trend line, which perfectly matched those fair value gaps right here for a continuation move to the upside. we had our massive break, 5-10 minutes right here, 8:35, and went sideways basically for the next hour or 45 minutes. Right at 9:30 New York stock market opening, we pulled back in and mitigated this fair value gap. Is there any way to judge which fair value gap can be filled immediately by looking at volume or any other momentum indicators? I don't really think so that there's a very accurate way to actually say which fair value gap is going to be filled. For example, if you're a multiple contracts trader, I think it would be beneficial to you. For example, you could enter on one contract right here, somewhere around here, and still have a buy limit for your second contract, or just if in case this fair value gap is being hit, you lower your average entry price with the second contract with a buy limit, for example, at 3,829 and a quarter. So this would be, I'd say, because otherwise, if you're always waiting for those low-hanging fair value gaps, oftentimes what's going to happen is you're going to be left behind, because sometimes it's not wicking down into this fair value gap. Let's see how our trade is going. Not good. Let's go back to our 1 minute time frame. Higher lows, and lower lows, but that's still alright. Okay, so again, we reacted off this market structure shift level. This might have just been a fake out, but that's part of it. Maybe we get a better entry at the optimum trade entry level right here. And if not, this is just going to be a losing trade, and that's all okay. It's part of the occupation. We basically try to, I don't know, become part of. Losing trades, they're part of the game. I mean, if you hit a 10-to-1 risk to reward trade, you are, by risking 1%, you're all good. I mean, with a 10-to-1 risk to reward ratio, obviously you can't have a very high hit rate or success rate. Of course you can. For example, I think TheMas7er just posted it on Discord that for the past 16 days, the DR IDR rule has not been violated. So that's really impressive. So a 100% success rate based on the DR IDR, but where you enter is still basically up to the trader. If you use fair value gap, smart money concepts, if you, I don't know what you could use, the type 1A entry model, basically buying the bounce off a DR IDR high. But we will see. All right, so our most recent short-term high would confirm, if we break our short-term high right up here where my cursor is, we would actually have another market structure shift back into the bullish area, which would be very likely because we have our buy side liquidity target right up here and our 0.5 standard deviation, which is very likely to be hit after we had a 5-minute confirmation of our New York range. All right, so let's see how we're doing right here. All three indices compared, still below our high, same here, and same on US 30. Have a quick look at gold, what gold's doing. Yeah, doesn't look very nice. I think I prefer trading the S&P over gold right now. During the London kill zone, we had a beautiful setup with buy side liquidity being taken, a change of character right here. Let me zoom in this area here. A beautiful change of character, also with equal lows right here. Change of character, pull back into a 5-minute fair value gap, bearish engulfing candle of the previous two bullish candles right in here. Again, a retest of this 5-minute fair value gap and a continuation move into sell side liquidity. Could also use this low for sell side liquidity. And after which we bounced off, we retested our bullish order block, basically this one right here. Order block bullish. 1, 2, 3 times. 2 times, sorry. And after which we had beautiful also 830 and 825 or 930 entries into this move to the upside. But let's go back to our chart. Looks like we are going up higher. Let's compare 3 indices and see which one is breaking our high first. So let me draw them up. Could also consider those as equal highs. What is that white line? Ah, that's a Fibonacci retracement tool. All right, so let's see which of the indices is going to break our high first. Let me check the YouTube live stream chat if there are any new questions. No. All right. We see that now US30 is actually amping up, maybe giving us the confirmation for our bullish bias, for our 0.5 standard deviation to be hit. Our stop loss has been triggered. We will see, maybe we still get a reaction of this old fair value gap, but it does not look like it. We left behind a volume inefficiency. So let's get rid of this attempt to catch a retracement after a confirmed market structure shift. All right, let's see if we break our short-term high. If we break this, we should be ready to, yep, we broke it. And we are very likely reaching for our buy side liquidity target right now. Left behind 1, 2 small volume inefficiencies and a small fair value gap right here. Let's go to a 5-minute time frame and check our tick grid if we still have bearish divergence. We recovered a little bit. We're starting to form higher highs, relatively speaking to this high. Now I think we should be right again. So I'd say buy side liquidity is going to be our next stop, right at 3875.25. Also a volume inefficient, a volume gap. Oh, okay, they're pumping it up. Beautiful. Market structure shift, retest. Was a valid point that this could actually first reverse, because most traders that are in the market right now that are in a winning trade are in a long position. And what market makers like to do is they first like to stop hunt and liquidate most of those currently profitable traders, getting them out of the market before quickly reversing the price up into their intended target, which would be the buy side liquidity at 3875.25. So if we go to the 5-minute chart, for a potential entry, you could have used this old fair value gap with volume inefficiency right above it. I focus on a lower time frame approach with this market structure shift based on the SMT divergence we saw between the Dow Jones and all the other indices. But as of right now, we also got our confirmation on the E-mini Dow Jones, the US30 index, and all 3 indices align right now, so there's no divergence between any of the US indices. They all broke our 10:55 AM New York local time high, reaching for our 0.5 standard deviation. Let me actually turn them on so we don't have to show standard deviation lines. Show standard deviation lines, perfect. Let them all load. Okay, this would be our target right up here. I'm actually going to set an alert to see which one is going to hit the target first. All right, let's go back to the SP500. So we broke our short-term high, giving it a new bullish market structure after this first little fake out. We could have checked it on a 15-minute time frame as well for a market structure shift, which we did not get. Basically, we also did not get a fill of this 15-minute fair value gap, so hard to say, hard to decide. All right, we closed above our short-term high, so I'm just getting quickly rid of this line. We left behind a small volume inefficiency on M5, a volume gap, big momentum candle right here on a 5-minute time frame. No real tick grid divergence anymore, to be honest. I mean, still relatively speaking to this high right here and this high. No, I think we should be right. Ready to take out the buy side liquidity. But we can break it down on a 1-minute time frame to maybe find a quick scalp opportunity into this move to the upside. Fair value gap number 1 with plenty of volume gaps right in here. Fair value gap number 2 and fair value gap number 3. Very small one. So basically this whole area, this whole 5-minute candle move to the upside. Another fair value gap down low. Since this target, our previous day high, is our buy side liquidity target, let me actually, oh, come on. It's too small on a 1-minute time frame right here. Let's grab our price node right here with our hourly fair value gap. We can be looking forward to enter now that we have a new market structure shift, but this time in the bullish direction for a potential long entry. So we quickly grab our retracement tool, use the ICT FIB retracement to look for a entry maybe below 50%, but we will see what we get. All right, I think I'm just on this paper trading account slowly scale into the market. With multiple contracts, my ultimate stop loss is going to be somewhere down here below our new swing low, basically $550 with 1 contract. Someone's got a hot mic. Yeah, so please, if you're on the Discord live stream, mute your mic so no one's interrupted, but it looks like everyone's muted. No, Jason Rod, you're not muted, and FXBADR with a bunch of numbers is not muted, so please mute yourself. Otherwise, if you're annoyed, just jump onto the YouTube live stream. All right. So we had this faked out market structure shift right here, just leaving it on the chart. MX. Did not work out. All right, this is our most recent swing high from which we could react off, get a pullback from this breakout to the upside. We will see. Very likely just rated sell side liquidity for all the 1-minute scalpers or 5-minute scalpers, placing their stop loss right here. Let's see, our overall buy side liquidity target would be our 0.5 standard deviation. Let's compare all the indices. They're all pulling back right now. Dow Jones is now actually leading the move currently, relatively speaking, to all the highs above the DR range. So we also got our bullish confirmation on the E-mini Dow Jones right now. Right here. Beautiful. Retest is going up. Someone's got a hot mic, whoever it was, coughing a lot. All right, so let's see. Sip of water. So overall, this fair value gap up here, where we have our negative, our 0.5 standard deviation inside of, is a 1-hour fair value gap. Right here, I just refined it down to a 50-minute time frame. So for everyone who missed the beginning of the stream, so this is the 1-hour fair value gap right above our buy side liquidity, which would be our previous day's high, which I think after such a parabolic move, I mean, look at it. It's fucking vertical. You would assume that our previous day high very likely is going to be taken out. Maybe mitigate this 1-hour fair value gap. Then we broke it down to a 15-minute time frame. All 3 windows at the same time. You right here where you usually have your layout saved, you click on the select layout and you can choose a layout. I think you can use up to 12 charts at the same time if you really want to, or here, yeah, 8 charts at the same time, 7, 3 charts, and you can pick and select a layout. You can also sync the charts, for example, the intervals or the time frame, the time and the date range. So for example, if you move one chart, all the other charts are moving. I got that tip from Agent Smith. I know you're listening. Yeah, so then we going back to this fair value gap that I refined. I refined it down to a 15-minute time frame using this high and this low right here. Then breaking it further down on a 5-minute time frame. We are looking at multiple 5-minute fair value gaps inside this higher time frame, 1 hour and 15-minute fair value gap, this red box. Hang on. Just for comparison's sake. Okay, everything's still looking alright for our trade. We have multiple smaller fair value gaps inside this bigger fair value gap, so we could refine it even more now to the 5-minute. Alright. And now we could be using, for example, a different color, like yellow, for the refined fair value gaps. And now we're going to extend them right, so we don't have to drag those things out. Okay, I can't have them uneven. All right, so we are somewhere over here, yep. So if we go down back to our 1-minute time frame, where we used our entries, or where we did our entries. Yeah, and DT or Tobias, you very likely have to pay to use more than, I think 2 charts next to each other would be all right with a free membership. I'm not sure, but they're really pushing you towards to buy a Pro Plus or even a premium membership. But it's alright, it's a great trading platform. We can be glad that we don't have to trade on MetaTrader all day, at least in my opinion. Yeah. Alright, so 1-minute time frame is on the chart again. Filled in this fair value gap. We still have a few that could be filled before reaching buy side liquidity. We entered with 1 contract so far to wait up for our first take profit target to be hit, our 0.5 standard deviation. And now we see that inside this huge 1 hour or 15-minute or 5-minute fair value gap right here, we have smaller 5-minute fair value gaps right in here, but it's pretty unnecessary. I mean, where's the difference? So I'm just going to not extend them because it's pretty unnecessary. We have our overall target, which would be the 0.5 standard deviation right here at 3,883 and a quarter. And our buy side liquidity target above our previous day high. At 3,87500. All right, let me go over to USD CAD retirement setup. I don't really want to switch between too many charts because we're trying to focus on the S&P with the DR, IDR, but I think a quick look won't hurt anyone. Retirement setup is the DR, IDR. Get rid of all those ugly lines. Well, potentially we could be looking at a retirement setup, but we have a bullish bias confirmed, and we have plenty of fair value gaps that are likely to be filled down here, especially on a higher time frame. So we will see if this low is actually going to hold true. That's why we're focusing on the ES. Let's see if we get this purge to our buy side liquidity right here. We can actually use the previous day high indicator on all 3 charts. So for example, On Nasdaq, we already broke our previous day's high. On the SP 500, yeah, right. Okay, so we're using daily high low, this indicator right here, and this one right here, high. So did we break our previous day high on US 30 already? It would be interesting to know. We broke it now on the SP 500, so we purged that buy side liquidity. Come on, where's our previous day high? Oh, even above our 0.5 standard deviation, so there's plenty of room on US 30. Let's go back to our chart. So we grabbed that buy side liquidity above our previous day's high. Our next target is going to be our 0.5 standard deviation of our opening range from 9:30 until 10:30. Let's watch and see, and maybe we get some more entry opportunities until we reach our 0.5 standard deviation. But so far it worked out really well. We had this little fake out change of character where I got confused a little bit with the SMT divergence that was forming at that time between US 30 and Nasdaq and S&P. Also with our tick grid divergence, we can now actually check our tick grid and see if everything's matching up. Oh, I hope everyone sees it as well. Give you a few more seconds to catch up on what's happening right now with the tick grid compared to the S&P 500. Compare the highs. You see that we form lower highs on the tick grid while we're forming significantly higher highs on the S&P 500. So I'd say the overall buy side liquidity target is hit. We will see if we reach our 0.5 standard deviation. I mean, it should only be a range of 33 ticks, 8.25 points. This should be possible and in reach. We will see. All right. Also Nasdaq hold beautiful support above our most recent market structure swing high right here at 11.038 or 38 and 3/4 right here, continuing up higher. So that S&P 500, and now we are pumping. Now we are in the market. Beautiful. Maybe already reaching our take profit target right here. Unfortunately, we did not get a deeper pullback. Of course, with your bullish bias confirmed, you could have entered based on our old 5-minute fair value gap that we had right here, where we already formed a very small low time frame double bottom pattern right here, for example, as a supply area. But overall, I got spooked a little with this change of character. Did not work out, but we still got an entry relatively up high, but still in profit. We will see. I'm thinking of dragging my stop loss closer to my entry, to our DR low. We modify it. We see how it's continuing and how this divergence on the tick grid is playing out. All right. Let's check all three indices. All three indices formed a new higher high compared to the 11:30 high. So they all broke their high. There's no divergence between the indices right now. Let's see which one is closest or was closest to hit our 0.5 standard deviation. 19 ticks on ES1 and 21 right here on the US 30. So relatively speaking, US 30 is closer to reach the 0.5 standard deviation. Buy side liquidity has been purged on S&P and Nasdaq above the previous day high. I would always mark up my previous day high, previous day low, like at the beginning of the stream, where I also drew lines at, for example, let's go back to our 5-minute time frame. Trade's running nicely as of right now. We have our current week low. So for this current week after Christmas, We have a low at 3805, which is lining up with the low we formed yesterday. So our previous day low right here, PDL, is lining up with our current week's low. And if, come on, let's look at it on a 15-minute time frame. I guess that makes it a little bit easier. Quickly, everything's still going up. That's beautiful. So this is our overall week, and our previous week had its high right here, this thick orange line. Previous week's high right here, previous week low right here at 3,788.50, and let's use another price marker up here at 319.75. So this is our previous week range, basically created only on one day, where we purchased sell side liquidity below this low, also below a 000 key level for institutions and everyone. Not for everyone, but mainly for hedge funds, institutions, and here below a 000 level, 3,800. Reverse from it, quick V-shaped recovery. And so basically we are still within our previous week's range. We did not have an extension of our previous weekly candle, highs and low. During the current week, we have our previous day high sitting right here that we now purge, and our previous day low, above which we consolidated during the Asian range, and then basically had this beautiful, I don't know how you could call it, I don't know, looks like a perfect asymmetric cup and handle. So if we get a consolidation here, we'd had a perfect little cup being formed for a handle, a continuation break to the upside. But that's just classical charting patterns. Doesn't work. All right. So we're still on our way to our take profit target at our 0.5 standard deviation with a beautiful 1-minute time frame entry. Come on. Draw into running in profits. Beautiful. Strong movement to the upside today. It's like there's a magnet right here pulling us up to our 0.5 standard deviation. Come on. All right, we could be looking for more entries towards our ultimate goal. He had a 0.5 standard deviation, which could be as fair value gap here. Also with plenty of volume inefficiencies on a 1-minute time frame, but you can't really draw them out all. So I'd be only focusing on the major fair value gaps. This is a 5-minute volume inefficiency, so we can maybe color this one in, let's do pink. Very similar to red, but we will see. Buy side liquidity above our previous day high. As soon as we reach this level, we're inside a hourly fair value gap, also a 4-hourly fair value gap. I'm not sure about the daily, to be honest. I forgot about the daily. Let's quickly check. Daily fair value gap. Nope, there's no daily fair value gap, but we're still basically within this previous week range. That's what it's looking like on a daily time frame. Previous week's high, previous week's low, current week low, current week high. We could be taking out our current week's high with this massive bullish engulfing candle here. But this basically has been a whole price action for the week before Christmas and now the week after Christmas between New Year's Eve. Let's compare our indices. Nope, no, we didn't want to do that. So plenty of entry opportunities over the whole day, not during the Asian range, but for the overnight range, if you have the opportunity to trade the London session, basically. Today would have been a day for it, but even at 8:30 news, so 8:30 a.m. for all the people that live around America, with a beautiful retest of a trend line, which also filled in a fair value gap right here at 8:30. jumping into the market, continuing to consolidate, enough time for you to look at the whole day, at the whole price action where liquidity lies, draw up those fair value gaps, set your buy limits, ready to go for market open 9:30 with a massive rally to the upside, again followed by a consolidation, which we caught during the live stream at the beginning at least, which was handy for our charting. We are so close to our take profit target. We are now inside a fair value gap right here. But we will see. I'm not going to add another contract onto it right now. We're still going to just leave this position running. This would be the only fair value gap from this most recent move to the upside. We can leave a Fibonacci retracement tool on here, perfectly lining up with the optimum trade entry right here. But let's also bring up the 50% level just in general, so we have a type of measurement of how deep this retracement is actually going. But we already see a reaction of this 1 minute fair value gap. We will see. Let me check the live stream. Gabriel. Beautiful. You're also running in profits. That's nice to see. Stefan. All right. I'm having a quick toilet break. I'll be back within a few minutes. And we are back. Let's see. We're still consolidating inside this fair value gap, or at least filling it. Let's check our indices. Very close to our 0.5 standard deviation on all three indices. USD CAD now broke the DR low, which would basically invalidate this whole theory or strategy, but I mean, it's part of it. Beautiful setup though for the overnight range with a close below, a pullback to our IDR high, change of character, pullback inside of this fair value gap, bearish engulfing candle, continuation lower, retest of our IDR of our overnight range low, bearish engulfing candle, continuation, fair value gap fill right here for a further continuation short. And I guess we're just continuing short for the rest of the day here on USD CAD. All right, let's have a look at our tick grid chart as well. So we see there's still bearish divergence between this high at 1132 and the high we formed at 1154 right here, or 1152. Let's check the lows. Now with the lows, we actually look at bullish divergence, because on a tick grid we formed a lower low, relatively speaking, from this low or those lows right here to the current low that we formed. So because the current low is a higher low on the chart, but on the tick grid we actually see a lower low, we could be looking for a potential long opportunity. I mean, it's paper trading anyway. So we add a second contract inside of this fair value gap for our buy side liquidity to be hit. I'm going to move my stop loss now to the DR high right here. To our most recent swing low, I'd say. Let's see, let's make our magnet a little bit bigger, maybe it helps. With a little bit more force. Buy side liquidity above our previous day high. Our 0.5 standard deviation. So this bigger fair value gap here, colored in red, is our higher time frame 1 hour fair value gap right here, which we are currently inside of. All right, I guess now it's just patience until we finally hit the 0.5 standard deviation. We can go over to ES. They're pretty much all doing the same thing. Got really close to our 0.5 standard deviation. So now we just have to wait. We can draw some 5-minute fair value gaps that we maybe could react from. All right, we have another fair value gap right here when we crossed our high. Same here. Very small one right here on NASDAQ. Only looking at the 5-minute time frame right now. On US 30, we just got inside this fair value gap, this bigger one. And again, another fair value gap right around our DR high. Also another one even lower, but the probability of that one being hit, I'd say, is pretty small, but you never know. So we're just gonna chart them. All right. USD CAD bounce. We actually did not close below the DR low, so we will see. Even though the low has been violated with this wick, we will have to wait and see. Set for yearly lows, dollar force against yen, Swiss franc, Australia, sway, China outlook. Yeah, not really interesting. continuing to pull back. We've got our 1 minute fair value gaps ready. Maybe retesting our previous day high. This would be a nice level to look at. All right, completely filled in this gap right here. This is our previous day's high, this gray colored line. Our previous day high for NASDAQ is inside our DR range. And for US 30, it's right here at 33,567. So let's wait and see, go back to our lower time frame and see what we can do. And again, for the meantime, while we're basically waiting for our 0.5 standard deviation to be hit, feel free to ask any questions in the chat. I'm happy to answer them all. All right, we just retested the 3875 buy side liquidity target from earlier above our previous day high. We are basically just trying to scalp our way to the 0.5 standard deviation. Rejecting from previous day DR high. Okay, let me look at that on a different chart right here. Previous day DR high. Yeah, our previous day DR high is perfectly lining up. It basically created our previous day high. We broke through it and now we're basically holding support on it. Ideally inside this 5 minute fair value gap would be great. Would you look at a short here? Do you think it pull is too strong to buy side liquidity? I mean, theoretically, we rated majority of the buy side liquidity above our yesterday's New York kill zone high. Of course, now we're looking forward to fill in those fair value gaps right here from a hourly fair value gap right here. Of course, there's more liquidity resting up here and some orders to be mitigated within those fair value gaps. But overall, I'd say I'd be looking forward to target the 0.5 standard deviation because it's to plan basically with the DR IDR range. I mean, trying to short it right here, I mean, it's risky. If you place your stop loss as well and you are happy to take a loss or even maybe even a few losses along the way before eventually catching that big short, yes, then you could be taking a short here. But with catching reversals, you have to prepare yourself for basically to burn your fingers or not burn your trading account. With proper risk management, you can catch reversals. You just have to make sure that you actually let your reversal trade afterwards run to a high risk reward to pay for all your losing trades you had while trying to catch this high risk reward trade with the reversal. So if you would catch a reversal and it's running into your direction, you wouldn't take profit at a 2-to-1 risk reward ratio, for example. Let's say you do something like this. You wouldn't take profit here. I mean, let's say you assume you had 1, 2, 3, or 4 losing trades in a row while trying to catch a reversal right here. You need at least a 5 or 6-to-1 risk to reward in order to, let's say, make a decent amount of profit for this day. We will see. Let's check on our lower time frame. Yeah, to the tick, we touched our 3875 level. We will see if we can move above this consolidation. This will be the next great test. Left behind a small fair value gap right here on the M1 minute time frame. See if we can continue to our target. Let's increase the power of our magnet. But Silver Surfer, the overall bias for today is bullish, so trying to catch a short there is high risk, very high risk, but definitely possible. All right, let's see. because today is parabolic movement. Every trader that hopped into a long position during the London kill zone or during the overnight range, if they didn't get, I don't know, fear because their profit is too large, they're basically in profit no matter where they entered. Even if they entered right up here, of course there would have been a little bit of drawdown, but basically even all the Asian traders during this accumulation phase down here are in profit. So yeah, I don't know. It's a bit odd. It's literally parabolic movement right here. I mean, for today we already moved from our low right here, from our previous day low to current prices right now. We moved 77 points, so 2.03% already within the last pretty much, yeah, 15, 16, 17 hours, something like that. So that's pretty good movement for this period of time, especially for the 29th of December. So let's see. Looks like the US 30 index is leading again, which now I think successfully hit our 0.5 standard deviation. Nasdaq and S&P are currently still lagging behind. Interesting. So for example, if you would have entered on this 5-minute fair value gap right here, maybe on a lower time frame with a volume inefficiency or something similar to that, could have been a nice little scalp to our overall profit target. We will see if it also will be hit on the other two US indices. But I'd say US 30 already hit our target. Alert didn't trigger yet. And this could be it. This could be that small, tiny little divergence at the top for a potential reversal. But I'm not trying to call that. All right, USD CAD bouncing very nice. We will see. We have this massive bearish fair value gap right here. Hi Matt, how do you analyze the general bias long or short on different time frames beyond the DR IDR model? And we did a whole high time frame, basically starting from the weekly time frame down to the daily, down to 4 hour, 1 hour, 15 minute, 5 minute, 1 minute at the beginning of the stream. You can rewatch that on the YouTube channel. I will send the link to that into the description on Discord, into the chat on Discord, sorry. But overall, for a good overall rule of thumb, I'd say start with the weekly. I always draw my, hang on, where can I show it to you? Let's go to a 15-minute time frame quickly while we're waiting. So basically what I do is I always draw out my previous week's high. Now let's do it on a daily time frame. Makes a little bit more sense. So I'm always looking at levels of where we're currently placed within our previous week, previous month range. So currently here we're looking at our previous week, which our previous week high and previous week low, which basically formed both on Thursday, December the 22nd. So for the past 1, 2, 3, 4 days, we've basically just been ranging within our previous week's range, or basically between this single day's range, consolidating on a higher time frame. So defining a higher time frame bias for this scenario could be tricky, unless, you know, of course, we can use all those volume inefficiencies for rough target areas like this one right here. And for example, those higher time frame fair value gaps that we could be looking at. But overall, the bias, at least on a higher time frame, would be hard to, I'd say, form. You can break it down into a even lower time frame. And for example, I always like to draw in my current week's low, for example, right here, that we formed on Wednesday, so yesterday, which is also lining up with our previous day low and our previous day high, for example, as a overall target for buy side liquidity. After seeing this parabolic move to the upside, it was pretty much inevitable that it's not going to take out our previous day high, which is lining up with the RDR from yesterday. We have our current week's high that has been formed on Monday, 26th of December, have that on the chart as well. And then refine your fair value gaps down to your lower time frames like we did here. And yeah, right now we're basically just ranging, but with enough momentum to trade it on a low time frame. So let's go back to our 5 minute, 1 minute chart. Check all the indices. So right now we see that we actually have a small SMT divergence going on with lower highs on both NASDAQ and the S&P. Let me actually connect those two highs properly. Make a little resistance line right here. Boom, here we go. And here we formed higher highs, actually touching the 0.5 standard deviation target. NASDAQ is looking relatively weak compared to SP 500 and the Dow Jones. Almost about to wick into this lower fair value gap that has been created from the 11:30 candle, 11:30 a.m. New York local time. Oh, hang on. Zoom. All right. Wick below, almost, yeah, retested this 3875 level again. Seems to be holding some good support right here. Our overall target is still right up here. We have to turn our magnet. That might be the reason why it's not working. But we're still waiting here. Maybe we use a third lightning strike for even more power. All right. Let's go over to our comparison chart again. So we see NASDAQ is pulling back up with the other US indices. I hope that answered your question as well, Matrix, how I'm forming my general bias long or short on different time frames beyond the DR IDR model. But right now it's pretty hard to define your bias if we are still inside our previous week's range, but short-term biases are very great to form with the DR IDR model. SP 500 and NAS100 both took out yesterday's high of the day. Yes, the high of the day, yesterday's high of the day, is represented by this gray line here in our general overview between all three US indices using the daily high-low indicator here by Unknown Unicorn, I think. Very basic indicator. You can also just do it manually so you're aware and it's not just some random line on your chart. This was mentioned here with the buy side liquidity above PDH, our previous day's high, which we retested here at 3875 almost 2 times now. All right. So my overall target, if I would have held any positions from our, for example, 8:30 opening with the retest right here, filling in this volume inefficiency here on a 1 minute time frame, same for here, my overall take profit target would have very likely been this buy side liquidity represented by our previous day's high and not really the 0.5 standard deviation. Why? I mean, of course, I maybe would have left 1 or 2 contracts on this trade to hit my full take profit target at 0.5 standard deviations, but if I would have gotten in on S&P 500 today, right around here or here, then I would have certainly, yeah, I don't know. It's hard. It's really hard for me to stream live and actually also take live trades at the same time. I'm not sure why that is. I think it's because I'm focusing too much on talking and drawing things on the chart. I mean, yeah, I would have to switch over to my second monitor or my second screen to actually execute my entry. I had some nice trades prior to starting this live stream. I think I started this live stream right at 9:29 or 9:31 a.m. New York local time. So there was plenty of time for me to take some nice setups on gold and pound US dollar, like those two ones right here. And another beautiful one on gold. Already hit my take profit target for the day, so I'm not really too concerned about missing out on something while live streaming. Here, now I have the post again from TheMas7er, the guy who we have to thank for this awesome DR IDR indicator, or this whole concept. Really grateful for it. That I think he just wrote it for 2 hours ago, that for the last 25 DR sessions in a row, we had a 100% hit rate. Not hit rate, but a 100% success rate. That our bias was confirmed, and we did not break our DR IDR low depending of the setup. So basically from the 16th of December until today, price has not violated the DR rule once, hitting a 100% success rate. That's pretty awesome. And especially during the period basically right in front of Christmas and right after Christmas, where most traders don't even, I don't know, even ICT, he said that he's not going to be trading until I think the 3rd of February or something like that. But yesterday he uploaded a trade he took while he sneaked away from his wife. Pretty funny story. He had a new Twitter live stream, or however you want to say, Twitter space or something, yesterday as well. So I think if you're bored and you are a trader and you're really interested in the financial markets and how price is being delivered, yeah, it's very easy. Quickly check on your phone and maybe even execute a position, even though you theoretically shouldn't if you're not fully focused, but it is what it is. It's highly addictive, I think. There's no reason to deny. All right, let's switch over to our future contract comparison. All right, we see we are forming lower highs right here still. Let's see if we can break this short-term trend line right up here. Okay, we're breaking out on the S&P, maybe finally reaching toward our full take profit target, holding support of on our previous day's high. Beautiful. All right. Rejected, I'd say. Check USD CAD. Still, I wouldn't, yeah, maybe you'd find the retirement setup, but I think the retirement setup has already presented itself right during the overnight range. All right. So we wicked and opened back up above our trend line here. Buy side liquidity target, our 0.5 standard deviation. Let's wait and see what's going to happen now. That's yeah, it's taking its time to hit the 0.5 standard deviation, but overall buy side liquidity has been taken. So if you have been in a trade maybe since early Asia or early London or even late London or from 8:30, 9:30, take some profits, secure your profits. Of course, leave a runner on your trade or don't close it by 100% would be unnecessary. Maybe you catch a few more ticks to the upside to our 0.5 standard deviation, but make sure to secure your profits if you got in on this massive parabolic move to the upside. Basically, I mean, if I zoom out, this was the price action today. Do we have a parabolic curve here somewhere? Draw, curve, arc. So we should be able to go from this low try to connect as many lows as possible. Yeah, pretty much parabolic. So let me check that we also hit most of the lows. So this is our current low for the Asian session. We hit the parabolic curve, hang on. Once, twice, 3 times, 4 times, and now we'd be looking at, yeah, basically we're at the end of the parabolic curve. So let's hope we hit our 0.5 standard deviation for everything to work out. We can also take a look at the DXY actually while we are just sitting here. DXY, perfect. So the DXY as of right now on a 5-minute time frame is right around a, we could consider this a bullish order block after this impactful move to the upside. So let's actually make a bullish order block out of it. Extend lines, right? Perfect. Retested it, and we're now currently sitting inside of this bullish order block, which also is giving us the support on our DR low. We have to wait and see. We did not get any confirmations as of right now, but we had a beautiful gap fill right here. So, for example, right here, your bias would have already been bearish with a close below here. So we could look at a bearish triangle right here with a close below the DR low. Let's turn this around, make it smaller, and color it in red for a bearish bias. Of course, this has been violated because price really wanted to fill in this volume, or basically this complete gap. I think they're calling it GIB. I'm not sure. I missed that part of the master's education. But I think everyone knows what a gap fill is. Yeah, basically forming this small double top patterns or M pattern right up here with a bearish engulfing candle, giving some more indication, breaking down into our overnight range or the London range, closing below, giving us a bearish bias, pulling back right to the 50 level, continuing further down, starting our New York range basically, which filled in fair value gap right here and here with a bearish order block or breaker block, whatever you want to call it. So many names for those things nowadays. And right now we are consolidating. This might be also the reason for our indecision right here on the SP 500. This consolidation, where is it going to go? That's the question. Let's compare our three indices. Yeah, consolidation up high. We will see if it's most of the time, if you have a certain buy side liquidity target and we're consolidating right below it, I think, I don't want to put any number out, but around 70% of the time, it's actually continuing in that direction of the liquidity pool. Maybe most of the time also just faking out, so consolidating, breaking out into that liquidity, trapping traders long, pulling back, making a change of character or market structure shift, and for a ICT 2022 mentorship entry opportunity. Okay, let's get rid of that. But this is ugly consolidation right now. Very likely due to the DXY just going sideways. We can also check it on a higher time frame to see what our general bias would be. Pretty similar to what we saw on the SP 500 daily time frame. Also still within our, let's go over to the weekly. Of that, our previous week's high right here and our previous week's low right here. Switched on to the daily. On the daily we also see that for the past 1, 2, 3, 4, 5, 6, 7, 8 days, we have not extended this range. Now we can, yeah, I don't know, it would be hard to form your bias. The only thing it's really doing is consolidating, keeping it calm before we will see what happens on the 1st of January or the 2nd of January and everything. So that's going to be really interesting. I mean, We have fair value gaps and stuff like that to fill on its way to the downside. Most of the stuff has been filled. Theoretically, of course, there are some fair value gaps to the upside that are still looking forward to be filled, but overall, looking at this massive uptrend, if we, for example, were to draw a trend line or something, we could say that we are currently not within bullish market structure anymore on a daily time frame. Pulling back, making new lower lows. I mean, the most recent change of character we had as soon as we broke this low. We retested it, continued further down. Then we got right into this December period where prices most of the time don't move too much on a daily time frame. Let's go back. We're still inside this range. Oh, now we got a drop here. So I hope most of you already took profits if you have been in a trade from earlier today, maybe Asia, maybe London, maybe early New York kill zone. So yeah, beautiful. Not this price action here, but the rest of the price action we had most during this session, basically, with more than enough entry opportunities. And I think the struggle I had at the beginning is that I was focusing on too many charts at the same time. If you would only focus on futures, in this index futures, for example, all you would have to have open is maybe the DXY right here on a daily time frame. Do your analysis on Sunday, starting the new week, having everything lined up with on your 5 or 15-minute time frame, just looking at it to confirm, okay, where we at, how is the DR and everything lining up on the DXY, your overall SP 500 futures contract chart. Only focusing on this, setting your alerts for it. So for example, I don't know, you go to sleep and you set your alert at the DR, the Asian range high, for example. You wake up, you see that alert has been triggered, you're already aware and stuff like that. And then you have your SMT divergence or your general market overview on your chart open. And then you don't get too confused, because if you're now also looking at pound US dollar, gold US dollar, Euro US dollar, USD JPY, USD Canadian dollar, you're just confusing yourself and you don't actually need to look at so many charts. It's enough if you master one, and then if you want to, you can still move over to a second chart. But I think especially as a beginner, it's important to focus on one, study it, get a feeling for how it moves, because even the SP 500 compared to the NASDAQ and the E-mini Dow Jones is moving differently. Of course, relatively the same, but especially on a 1 minute time frame, if you are a low time frame scalper, it's behaving differently. It's a little bit more volatile, for example, NASDAQ especially. Did you ever have a season where you lost a lot of money when you first started? Of course, until I basically realized that money isn't everything, at least for trading, and that it's not really about the money, it's about percentages. At least that's what I stuck to. I think if you know the power of daily compounding, it's pretty much inevitable to focus on the dollar bills. But you can, of course, it's tempting. And most of the traders, or at least for example me at the beginning, I didn't think about trading long term. I was only worried or concerned about the profits I made today, and that I'm, for example, not good enough if I didn't make profits today. But I did not think about the long-term effects of my trading. So okay, even though I lost money today, maybe 1 or 2%, if I have a maximum drawdown rule, I'm still profitable over the whole month or the whole week. But it's hard for humans to think in this long-term survival way of thinking, at least in my opinion. So it's hard to think, okay, tomorrow is another day, even though I, for example, hit my daily drawdown limit of maybe 1 or 2% drawdown. So for example, 2 losing trades in a row, just calling it a day, not getting into that bad habit of continuing to trade and ending up in that vicious circle of, oh, I have to make back my losses and blah blah blah. I think everyone knows the drill and what I'm talking about. Being patient, and making 1% per day, compounding your profits, you actually end up to at least 20x your initial account balance over the period of a whole year, only regarding weekdays. And I think that's powerful enough. And by the time you finally accomplish that for maybe 1 or 2 years, you already built up your account balance to a decent size, and then you might be considering taking a higher risk to reward ratio strategy or making more than 1% profits per day. But by the time you have this bigger account, let's say for example 100 grand or 200 grand, you already realize that you don't need more. You don't need more than 1%. We right now at the beginning, so let's say you're starting out with a $1,000 account or even less than that. Of course, 1% isn't going to satisfy all your dreams and wishes, so that's why we keep trading with 1%. But let's say you already made it to the 100% and you keep on making those 1% profits per day on average. Yeah, I think that's the key that changed most of it for me. All right, let's go to our SP 500 chart. We broke below our support level right here. Let's see. Quite a sharp drop. Not sure if we should consider this a market structure shift. We made our high, low, pullback, higher high on a 1 minute time frame pullback. We did not break our higher high right here, our most recent swing high, our short-term high. So we are still, and I think you could consider it a bearish market structure shift. Let's check our tick grid and see. Yeah, initially we had this huge divergence here from this high to this high, after which we only made lower highs, which is fair enough. We continued to make lower highs. And we formed a low right here and a higher low right here. That's also all cool with bullish divergence there. So yeah, right now we're waiting for our 0.5 standard deviation to be hit. But the sharp drop does not look good at all. We might actually see a higher time frame retest, for example here, into our fair value gap right here on the 5 minute time frame. Let me get rid of that triangle. Maybe retesting our DR high, IDR high, for a small pullback back into our highs. I mean, US 30 is already also leading with the move, already inside this fair value gap, very close to the DR high. Same for NASDAQ. That's why we had our overall profit target right here at the buy side liquidity above our previous day's high. Basically what you could think about, the price action that happened above our buy side liquidity target. Unfortunately, we did not hit the 0.5 standard deviation on the SP 500. We hit it on US 30, on the Dow Jones, is to trap volume up high. So for example, traders getting into the market here, 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 while actually selling all their long positions, slowly accumulating short positions for this sharp drop to the downside eventually. Above buy side liquidity, inside a hourly fair value gap. If we would have broken it down, we're very likely inside, I think I already broke it down. We were inside the second fair value gap right here based on a 5 minute chart, I think. So yeah, I mean, of course, the probability is there that it's going to hit at a 0.5 standard deviation up here, but it's not guaranteed. That hunt for the buy side liquidity above yesterday's high, we hit it. That's what I also said. If you are still in a trade, make sure to close out your profits. Live trade, if you're paper trading, experiment, watch the numbers and go for it. But on a live trading account, funded account whatsoever, make sure to protect your wins, especially if we already hit the buy side liquidity above our previous day's high after making a move. Just let me point it out again. like this today, this parabolic move to the upside, 2% on the S&P. So eventually we could be looking for a potential short down to our DR low. Eventually we could be seeing some support of this old market structure high, and this fair value gap where we already bounced off for the first time, where we actually got our first entry from. But we did not violate this lows either, so theoretically we're still in bullish market structure. All right, and Q1, let's go to our overview and see if all the indices bounce. Oh, look at that. The E-mini Dow Jones had a beautiful retest of our DR high and immediately got that reaction back up high again. We did not see it on the SP 500, neither did we see it on NASDAQ. But beautiful retest of our DR high, which also lined up with a fair value gap. Let's check what the DXY is doing on our 5-minute time frame. Still consolidating indecisive. And the S&P 500 very likely filled in one of those short-term fair value gaps right here for a potential continuation move further to the downside. How long have we been streaming for right now? What's the time anyway? I completely lost track of the time. It's 6:42. All right. We've been streaming for 2 hours again already. Man, time's flying by. All right. Let's watch if we actually hold support here. But it's insane. Even if we would have scalped this right here on a low time frame, and by scalping I mean buy limit here and already taking profit on one of those fair value gaps for a very, very, very quick move. Of course, nothing's ever guaranteed, but this could have been an easy 30 tick move or 20 tick move right here on E-mini Dow Jones $5 futures. Of course, back tested ideally, so you know your probabilities. Let's go back up to a 5-minute time frame. How about that? All right, live trading 4. I think I'm going to end this live stream soon because I'm going over to a friend's house to have some dinner in roughly 20 minutes. Okay, that's hectic, but it's all good. I want to see if we hit the 0.5 standard deviation on the S&P and if this reaction of the DR high on US 30 is actually continuing to hold. How about you guys? Have you been taking any live trades today during the New York kill zone? Be interesting, or at least during the IDR range. I think ideally I should reframe that question, and if you took any ideal trade entries during the overnight range, because they have really been like spot on with the overnight range, with basically everything the master is teaching us, in combination of course with everything ICT taught us already. Beautiful mitigation of those fair value gaps here, but we will see if we can hit our 0.5 standard deviation. What's the time? That's 6:45, so in 15 minutes we get a new hourly candle opening. So let's check our hourly time frame. So on an hourly time frame, we last 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, last 4-hour candles. Depends if we are going to consider this as a value. I mean, it's almost a doji, so we could consider basically since 1 a.m. New York local time this morning up until 12 p.m. So for the last 12 hours or 11 hours, we had only bullish hourly candles. We're now above buy side liquidity, which is also yesterday's 0.5 standard deviation. Not today's, unfortunately. And yeah, so we could be looking at a small pullback. It wouldn't hurt, definitely. Took some, it wouldn't hurt at all. We will see how hourly traders react to this doji, let's say, indecision candle right here above our previous day's high. If they're using this as an opportunity to bring short momentum into the market to maybe fill one of these fair value gaps here of this basically parabolic move starting right from 8 a.m. New York local time, or if they're just going to continue the rally to the upside based on the hourly time frame. On a 15-minute time frame, we're looking at something very similar, some indecision pretty much right up here. Lots of big wicks, and at least especially for the past 15 minutes, not much, there hasn't been lots of movement happening. We're still hovering around our previous day high, which is represented by this gray line, not the dotted ones right here. Maybe to eventually hit the 0.5 and then look for a reversal. Let's go back to our 5-minute time frame and check. Beautiful retest. All right. Yeah, not much is happening. So still 13 minutes till the new hourly candle opens up, and we see what momentum hops into the market. Christ, I took some far bear calls in this 4-hour fair value gap 480 for 100 SPX. Pretty confident about it. Bear calls in this 4-hour fair value gap 4080 for 100. I have to admit, I never traded options before. I learned something about them, but I decided to stick with Forex trading and especially futures trading. But I think it's very lucrative, or can be very lucrative if you know what you're doing. And if you can manage yourself, manage money, manage risk. There's basically no market that you can't make money with or money on. But yeah, self-management plays a crucial role. So it's not just risk management and money management, it's also how you manage yourself. If you, for example, see big FOMO candles, are you just clicking on the buy button? Are your emotions easily triggered? How do you manage after you had 2 losing trades in a row? How do you manage yourself? Do you stop trading? Do you continue going and you're almost starting to revenge trade to make back all the losses you made today because you can't end the day as a losing trader? I am not a losing trader. I have to make profits. And then you start to dig deeper and deeper into drawdown. Might even blow up your account if with lacking self-management, and also your risk management is, let's say, diminished or not executed properly. So you should always only risk 1% per trade, roughly. Of course, you can also lower it down to 0.5%, for example, if you're trying to catch reversals and you don't want to risk so much of your account balance on reversal trades, because ideally on reversal trades you catch something around a 5 to 10 risk to reward ratio to make it worth it to pay for all the losing trades you perhaps face while looking for this big reversal opportunity. So lots of things to consider, but not enough people, in my opinion, talk about self-management. I've heard one trader talking about basically how he made it to to become a professional trader. And what he did, he basically bought a video camera and he taped himself while sitting in front of his computer trading. And then at the next morning when he woke up, he did a analysis of his performance. So basically what he did, he watched the whole videotape and he took notes and wrote down, for example, if he noticed that, for example, his breath got really shallow, for example, or if he was sitting very tight or very nervous in front of the screen, just basically doing a self-analysis and also recording his screen, how he's, for example, executing the trades, if there's some delay, if it's flawless execution, basically using all possible tools to improve your execution and your self-management, risk management, money management, and stuff like that. Really interesting. I haven't gotten to that point that I'm actually recording myself with a video camera right next to me. So yeah, I'd say if you really think it would help you, I think of course it would help lots of traders, because I had a friend, for example, and I sat right next to him and he was completely tense during this whole process of trading, and especially when he had 1 or 2 losing trades in a row and stuck in drawdown, he started biting his fingernails and stuff like that. And you're trying to almost ignore that, and that's bad self-management basically, especially as a trader. You have to perform at your peak performance, best performance, flawless execution basically, in order to really make it, I'd say, like a professional athlete. All right, seems like we're working our way back up to our 0.5 standard deviation, reacting off this fair value gap right here. We're back in profits now with our paper trade right here. Looks like DXY is breaking. Let's see if we get a close below the DR here on the DXY. We can also grab our daily high indicator right here. So I'd say it is pretty inevitable that we are going to break lower and take out the sell side liquidity, in my opinion. So if the DXY and the S&P are correlated by any way, then we should see the S&P 500 continue on its way to the upside to the 0.5 standard deviation. TME head guy on YouTube you recommended helped. That guy on YouTube you recommended helped. Which guy? That would be interesting. Further on, Randy Howell. Oh yeah, of course, Randy Howell. Further on, just send it into the Discord live stream chat. Check out Randy Howell. He's awesome, man. Especially he's very old school, and also his website very old school, and he's something that really helped me controlling my emotions while trading, where his meditations, guided meditations, where he's basically teaching a breathing technique, especially designed for traders, because most of the time there's nothing, no meditations or let's say emotional control. You're always taking it from different areas of your life and trying to apply it for trading. Randy Howell is doing that especially for traders. It's really cheap. It's just a MP3 file. It's worth paying it to support him a little bit. But check out Randy Howell. I'm also going to put it into the YouTube chat. Randy Howell. Yes, exactly. Nope, not with Y at the end. It's spelled with RANDE, Randy, HOWELL, Randy Howell. It's all right, Stephen Harrison. I just read your response right here. Oh yeah, perfect. Zen trader, traders, psychology, trader state of mind. Exactly, that's Randy Howell. Great guy, worth listening to his videos. DXY, and we just called it inevitable that we're going to break our previous day's low right here. We just broke it, so we should see most of the things pump, like for example GBP USD and all other correlated pairs to the DXY or to the US dollar, which also includes the S&P and all stocks that are contained within it. Yes, the first live stream, I think that must be quite some time ago. I think I live streamed for the first time 3 or 4 weeks ago almost now. I think 3 weeks or something. I've been to the skiing trip in the meantime. Yeah, it's great. It's super awesome that you reminded me of Randy Howell. It's really helps if you're trying to, let's say, control your emotions, or at least be a little bit more aware of your emotional state while trading. And it's funny because most regular people, for example, my friends, or very likely also your friends, they're like, emotions. I don't have emotions, or they're either neglecting it or they're embarrassed to admit they have emotions, and it's never something you like a very common topic you can chat with your friends about or with your friends and family. Like, oh yeah, I'm trying to learn how to control my emotions, especially for trading, where I'm sitting in front of my screen doing my analysis and actually executing my live trades. You basically have no one you're able to talk about this topic. Like, there's no one. At least you have a very good friend who's also a trader, or I don't know, you meet a few traders because you put it out on Facebook or something, that you'd like to have a, I don't know, in your local area to, I don't know, meet up with a few other day traders or something. But other than that, there's no opportunity for you to really talk about how you are handling your emotions while you're trading and stuff like that. It's a very unspoken topic, especially for, let's say, non-traders. DXY is continuing to break. Bearish bias confirmation. We're now below sell side liquidity right here. I'd say the next target overall would be the sell side liquidity below whatever this thing is. What's that? And that's our low from right here. Why do I have this turquoise line on there? Yeah, we will see. Definitely it's dropping. Bearish bias confirmed. Now we are going to wait for the SP 500 to hit our take profit target. Let's compare the indices. We're still below now. We're getting above our resistance line right here. Another cool thing that I did to improve my patience and my, let's say, my emotions while trading is, since I have an Apple Watch, or if you have a Fitbit whatsoever, put it on while you're trading and actually record your heartbeat, your heart rate for example, for a whole month. Put it into an Excel sheet and study yourself. It's interesting, and especially during times you trade, really interesting, because when I first started doing that, I'm almost shocked and felt like I'm running a marathon or something, or a sprint. But even when I was just sitting in front of a screen watching a candle making up and down ticks, it's, yeah, crazy. All right, let's see if we can finally break above here. Last time, right before I ended the stream, I think 2 days ago now, I ended the stream and we got our perfect entry opportunity we talked about earlier. I got back to charts and I'm like, oh, come on. Should have continued streaming for 30 minutes and we could have caught it live on the stream. So note this fair value gap we just formed on basically all three charts right here. Also on Nasdaq, since the DXY is dropping hard now, we should be able to see some sort of correlation, the inverted correlation. All right, let's see this thing go up. Beautiful retest of our DR high, but only on the Dow Jones US 30. Unfortunately, would have been very cool otherwise. What is that BGR near indicator option? BGR near indicator option. Noob trader, what do you mean with BGR near the indicator option? BGS, oh, those, I'm not sure if you're saying this right here, but those are my indicator templates. So for example, if I'm, let's say I have my basic London kill zone strategy for pound US dollar with the stochastic RSI and one of my indicators, instead of having to re-add them to the chart all the time, I have a template for it, just right here, Scarpa Pro, stock RSI, I click on it, and everything's already loaded on the chart. And if I want to have, for example, I have a blank chart, I simply click on it, and it's a blank chart without indicators or anything on it, only the drawings. And for the pound US dollar strategy, basically the same strategy. And this is for S. So you can, for example, create a template for the DR IDR with maybe the previous day high low indicator on it and a kill zone indicator, whatever you're using basically on a daily basis. Simply save it with the indicator template tool right here. And to get them into your bar right here, you simply have to favorite them. All right, we're continuing on our way back up. DXY very likely to fill in this fair value gap that has been left behind right here. Maybe retesting the DR low right here or the IDR low for a area of interest. No, it's just patience. Quick question on the side. Has anyone been in the new Avatar movie Ways of Water so far? And if so, do you think it's a good movie or is it a, I don't know, a unfortunate continuation of a old movie, for example, like Star Wars or the new Indiana Jones that is going to be released, I think, next year, or I don't know, Pirates of the Caribbean, those old-time classic movies that are just being recreated to make some money. If so, just send it into the chat. I'm curious. I'm considering going into the cinema or into the theater, but I'm not sure because every time I'm going to the theater or movies, I'm disappointed. Okay, so we did not get our close above, unfortunately. Reversal fake out on all three charts. Yep. Oh man. What's the DXY doing? Curling back into this area. Let's go back to our cable chart. No, CAD USD. We've been looking at it earlier. Nope, other way around. And so you know, I'm not trading USD CAD oftenly. Yeah, definitely no retirement setup. Check out gold. What happened with gold over the past 2 or 3 hours? Continuation to the upside. Pretty beautiful. Let's plot our DR IDR indicator on it. We had our close above, we pulled back inside our DR range, IDR low, we did not close below it again, we basically filled in a fair value gap right here, which could have ended up as a beautiful entry, let's say for example right here, and on our IDR low, with our stop loss right here at the bottom of those 2 wicks, I'll take profit target at a 0.5 standard deviation for a nice 2-to-1 risk reward. Quick scalp. Such as this one right here with a beautiful fair value gap fill. Alright, rejected again. That can't be true. And heavily rejected with momentum here on a 1-minute chart. Let's check the 5-minute. Now we formed lower highs on this one right here. Lower highs, equal highs basically. That's proper buy side liquidity now. We have 4 equal wicks basically right here on US 30 at 33442. Let's quickly mark this up. Equal highs. We do not have something similar on any of the other charts. We made lower highs basically on the S&P on Nasdaq, so this could also be a hint for bearish divergence. Looking maybe forward to fill in some of those lower fair value gaps right around our DR high and low. Pulled back into our DR IDR low right here on the DXY, pulling back up. Right. What is the retirement setup? I don't actually know what the retirement setup is. I think it's just a little funny nickname to call a very like for example ICT is calling most of her setups a bread and butter setups, a very simple and easy to, let's say, easy to apply strategy or setup at least to trade from. But I just went with it because someone wrote into the chat earlier that on USD CAD there was a perfect retirement setup. Basically a setup you can retire with and call it a work life. People say it's good. Okay, thank you. So we're back inside our support right here. Let's see. If we continue breaking lower, I might actually have to end the stream because I have to go out for dinner very soon. It's 7 a.m. now for me, 7 p.m. now for me, and it just hit 1 p.m. New York local time. So with the new hour, we actually got a move to the downside or a rejection. All right, so this could actually be a turning point for a retest of our DR low, DR high right here. We already retested it on Nasdaq. We're getting closer on US 30. We're on our way down on the SP 500, filling in this fair value gap. So this could be a nice entry opportunity to take up to the DR high. But it's interesting. So we were basically, if you guys are into ICT's concept, he basically preaches to avoid the range between 12 a.m. p.m. New York local time and 1 p.m. New York local time. So basically lunchtime hour. That's what we had here basically. So if I'm drawing on lunchtime hour, that would have occurred from right here all the way up till here. So basically this whole consolidation was lunchtime hour, which ICT generally says to completely avoid. And we hit our buy side liquidity above our previous day's high prior to our lunchtime hour right here. And now we're out of lunch hour and we're starting to form a, yeah, I'd say you could call it triple top if you'd like so, but some sort of a rejection up here for a pullback, maybe inside of the DR, maybe just to retest our DR low, like for example here on NASDAQ and US30. But we will see what we get eventually. Confirms DR, retraces to other side, IDR, take back to confirm DR. Yes. We have those equal highs here on the E-mini Dow Jones, where we could see a reaction from. Same here. Let's look at, gold is still continuing, also a very similar setup. DXY is starting to be rejected from our fair value gap right here on the 500 time frame and from our DR low, IDR low range. Let's see. Can you trade the system on a tick chart? Of course you can, I think. Watch the DR videos by TheMas7er. These are the 3 primary videos. Yeah, there in those videos he's basically explaining the whole concept of how it works, but a retirement setup. What do you say? Retirement setup is when price confirms buyers, 5-minute close, below, above DR zone, and retraces back into the other border of the DR zone. You get high possibility entry based on assumption it won't break. Okay, yeah, so basically, let's say you get a close now below for a confirmed bearish bias, and now we see a retracement all the way back into here, because then we still have a 88% probability that this high very likely won't be violated, giving you a optimum risk reward opportunity to take a short down to our 0.5 standard deviation. Because of course, if you enter the market somewhere around here, your risk reward ratio will likely not be as high as, for example, if you catch an entry up here with your stop loss a few ticks above this high. Thanks for the explanation. Pullback. Let's quickly check our tick chart here. Not really significant divergence to see, maybe on a 5-minute time frame. Also not really. Some sort of bullish divergence because we formed a low right here, and right here we formed a higher low, so we could be looking maybe at a bullish tick chart divergence, but we will see how price is reacting off this lower time frame fair value gap right here. If we eventually get a close below our old buy side liquidity target at 375.25, come on, 1 second.
Hast du den Briefumschlag von Oma von mir mitgenommen?
All right, that was my sister. Okay, so let's see. So we have some sort of bullish divergence here because we formed higher lows here on the tick chart and we formed lower lows on the SP 500. So we could be looking at some sort of bullish divergence, but we would have to confirm with all the other indices. Could line up because we just retested the IDR high basically here on the NASDAQ 100, and on the US30 we already retested the low earlier. We did not get close to it on the SP 500, but we wicked inside this 5-minute fair value gap, which could have been enough for a nice order fill. SMT divergence. Yeah, there is SMT divergence because US30 did not form. Hang on, let me get rid of all those lines for a second. Because US30 did not form a lower low. Right here, if we go over it, we see that US30 actually made a higher low, while NASDAQ and S&P both formed lower lows. Could be a sign of strength. Therefore, the DXY has to play along to basically not pull back further inside here. Oh, I'm getting really tired now. It's been already, let's see. Come on, where's my OBS? ES has 5-minute volume imbalance at the IDR high. Yeah, I see it. Thanks for bringing it to my attention. Volume inefficiency right here. So this could be a really interesting target to look at for a potential long opportunity right here. Thanks for pointing that out. After such a long time, you just get blind to certain things. That's why I only like to focus, to really focus only on, like, I don't know, let's say maximum amount of 1.5 to 2 or 3 hours. That's not including live streaming. That's only including me sitting in front of the charts and focusing. But especially during live streams, that's really, really draining your energy. What's the correlation between US30 and ES? The correlation would be that all are basically US indices, and that some of the US30 stocks, or I think basically all of the US30 stocks, are included within the SP500 futures index. So to some extent they're correlated. Giving you some sort of indication. If US30 is pumping and, for example, Nasdaq is dumping, would tell you that the technology sector is, relatively speaking, weaker than US30. And yeah, so I'd say that would be the correlation between those two, or three basically. All right, so let's see. We haven't closed above right here, so we will see if this is going to play out. Let's quick let us scalp on gold US dollar. It should be working out as well. We should be able to hit our 0.5 standard deviation here. Still got a few fair value gaps on the way to the downside that could be filled. So just to explain it again, a retirement setup would be if we have our confirmed close above. So we would consider this a bullish bias here with this green triangle. And a retirement setup would be a pullback back down into this gap between the IDR low and the DR low, with a full blown retracement back up till here, giving you a optimum, come on, whatever it's doing on this way here to the downside, giving you an optimum risk to reward opportunity up to this. Come on, why is it deleted all? That doesn't matter. Doesn't like to stay on my chart. US30 is down, yeah, exactly. All right, we're starting to get some rejection of our DR low. Let's see how we're performing. Okay, we are back up. Let's compare our indices. It looks like some movement is happening. Let's go over to our 5-minute chart here with our slight bullish divergence according to the tick grid. We have a volume gap right on a 5-minute chart, right on our buy side liquidity target. So they gapped it basically above it. Interesting. Volume inefficiency. Let's mark this one up. Right here. Some volatility coming into the market. That's nice. Now that lunchtime is over, hopefully it doesn't just end up as a fair value gap fill. Same volume and efficiency here on the 1-minute chart, but on the 1-minute chart you find quite a few volume inefficiencies. Is there a video on GIB? No, I don't think there's a specific video for a GIB. GIB would be a just a, oh, come on, what is it again? I completely missed that. VIB would be a volume imbalance. So for example, exactly that's what we're looking at on a 5-minute time frame. So this, for example, right here, volume imbalance would be a VIB. So right here, this would be a VIB, volume imbalance. And for example, something we had on Monday, usually a weekly opening gap would be a GIB. So this gap right here. When there's literally nothing between, not even a wick, this would be a GIB. Hope this made sense. Oh, come on. All the charts moved over to... Okay, here we go. So we have this slight SMT divergence between between indices, but we see buyers were not strong enough to keep prices up high or to move prices up higher. We will see maybe we have that target on the S&P of this 5-minute VIB, volume imbalance. So let's see. Broke back down below it on a 1-minute time frame, filled in the fair value gap right here. That basically happened right after lunch hour was over. We will see. I mean, right now we're just within a not beautiful, very ugly consolidation in my opinion. I usually don't enjoy spending my time through these. I like to position myself within those parabolic movements, and they tend to happen right around 8:30, and they set up prior to 8:30 or prior to 9:30, like for example here, or on the parabolic move to the upside. If our target is this buy side liquidity right up here from our previous day's high, just entering based on fair value gaps on our way up, but looking for possibilities to grab a entry opportunity. Maybe, for example, I'd say the 5-minute volume imbalance that we looked at right here, or I think on this chart, would be interesting for a potential long opportunity. But I think I won't be live streaming any longer because I have to go to eat dinner with some friends. So if you have any questions left, ask them now so I can answer them. Otherwise, yeah, so make sure you have this 5-minute volume imbalance on the SP 500 on your chart. Set your alerts, and also, yeah, check for the tick grid to see if more divergences are coming up. Otherwise, I'd say the probability is definitely there that we are going to hit our 0.5 standard deviation, because right now it almost looks like we're just forming some sort of a flag pattern, a bullish flag pattern, going sideways, consolidating after a, just want to point it out again, after a parabolic move to the upside today on S&P 500. So this is really beautiful to see such a straight move to the upside, basically. I mean, it's deserved that it's now consolidating within this higher time frame hourly fair value gap above buy side liquidity from our previous day high and our previous day RDR range from our DR IDR right here. This is our DR high right here. This little wick also lining up with our previous day high. This was the overall target we marked up at the beginning of the stream, where we were still, I think, moving around those levels right here, that this is going to be our overall target, where we had a few beautiful 5-minute fair value gap entries right here, until we finally made our way inside of this buy side liquidity. We will see if our 0.5 standard deviation will be hit. I think it will, if I have to bet on it. I'm not sure what's going to happen in between. Maybe we fill this volume imbalance right here and retest that, or we are going to fill in some of those fair value gaps that basically have been left behind after our 9:30 a.m. New York local time opening right here, such as this one, those smaller 1 minute time frames. But generally speaking, we would wait for a change of character, which I think would be confirmed as soon as we break those two lows for a pullback back into maybe 387.525, retesting it for a continuation move further down if we're looking for a reversal. But as of right now, I'd say we're holding strong here. The support is holding strong for right now. We can check the indices for one more time for more divergences. So what happened here? So this looks interesting. So we had a new lower low right here compared to this low formed on US 30 at 120, but we didn't get nothing similar on S&P and the E-mini. That's interesting. But you see that indecision right now here on the 5-minute chart. Big doji with huge wicks. Same here, same on this candle. Right around here, pretty much the same thing. So you don't want to get stuck in this sideways movement unless you have a big stop loss and a big tolerance for drawdown. Thank you very much, Fish. The 0.5 standard deviation, if current session or from previous IDR, from the current session, I'm always looking at the current session. I think from the previous IDR, I think we should have already hit it, but I'm not really looking at the previous IDR 0.5 standard deviation. Most of them, no, basically not at all. I know that TheMas7er referred to that a few times, but I mean, where are the rules then? I mean, where do you draw the line? You can look at the 0.5 standard deviation from 3 days or 4 days ago. I mean, of course, eventually it's gonna be hit, but that's, for example, one. I can show that example right here on gold. So I saw that from another YouTuber basically. So let's say I'm going to disable my whole chart here, zoom out, and I'm just using a few horizontal lines like here, maybe one there, one here, and another one. Let's put it right down below here, and one up high. We turn back on our chart and we see that we actually nailed some nice support and resistance areas, even of some areas we didn't even know of, we didn't even head on the chart. Like, look at this here, and eventually those lines gonna play a significant role. It's just a question when that's going to happen. Like, for example, look how we nailed it here. That's pure randomness. Or look at this high right here, I caught it. So that's why I don't like to. Maybe yesterday's IDR 0.5 standard deviation could be interesting to look at, especially if it hasn't been hit and the bias is still bullish. Well, that's exactly what I mean. I mean, eventually, you just would have to draw random lines, and you say you trade based off your random lines you drew, and you can be profitable with it. I mean, it's working relatively well. If you think about that, I didn't even know where I'm actually drawing those lines, but it looks like I actually thought about where I'm going to draw these lines. It looks like actual support and resistance lines. So yeah, that's the thing. So yeah, like you said, King of Cash, every level plays a role at some point in time. So I'm looking only at what's basically happening today with the 0.5 standard deviation, because I'm pretty sure there are hundreds of 0.5 standard deviations all layered around this. But of course, it's a good guidance, I'd say, for a take profit target. So let's see if this IDR bounce is going to work out here on NASDAQ. I'm not gonna sit through this consolidation anymore. So yeah, thank you very much for watching the stream, and I hope you learned something. I'm not sure if I'm going to be streaming tomorrow, because I'm very likely going to the movies with some friends, and I think I'm not going to be trading before New Year starts anyway. So if I'm not here tomorrow, I wish everyone a happy New Year, and yeah, get your New Year's resolutions ready, especially for your trading journey or your trading business, basically. What you can improve, what you can do better than, for example, 2022 and 2023 and stuff like that. So, for example, like controlling your FOMO emotions, stuff like that. And for example, just trying to stick with one strategy for once, at least for, let's say, the first 3 months or the first quarter of next year, and see how it goes if you actually just trade with one strategy for, let's say, 100 or 200 trades, stuff like that. So Happy New Year's if I'm not here tomorrow. So take care, guys, stay safe, trade safe, and we will see later on what happened after this consolidation. Usually it's there to basically prepare for a parabolic, or let's say an impulsive move to either to the upside or the downside. Alright guys, take care, and I will see you either tomorrow or next year.